price management is something that we've been focused on as a company for many, many years. And we still need to cover inflation around the world, so that's a big part of why we focus so much on price inflation. But as I look at the year, there are things that are certain. I have a lot of confidence we'll be able to get 2% price increases. I have confidence that we have a very large backlog of projects. And I can look at when those projects start up, and I can see that the top line growth generated from those project startups will be about 2%. So say 2% price, 2% projects, that's 4% organic sales. Then the wild card is, well, what happens in the macro environment? And I think you can see that it's hard to predict a year ahead. Trade disputes, coronavirus. There are all kinds of variables that come into play that make it very difficult. So when we talked about guidance, we gave a spread in terms of what to expect in terms of base volume. We had numbers like a minus 2%, say, up to maybe a plus 1%. It will be somewhere in that range. If the base volume growth, which is very much correlated with industrial production growth around the world, is about 0%, then that says the top line will be 4%. And then you adjust based on what is going to ultimately end up happening with industrial production around the world.
Let's talk about that for a moment. We saw dismal numbers when it comes to industrial production coming out of Germany for the fourth quarter and for December. When you look around the world and you've got a massive global footprint, what do you see? What worries you?
Well, you mentioned one number. That's the German industrial production number is worrisome. Industrial production in the U.S. has been slowing for several quarters, so it hasn't fallen precipitously, but it's been a general softening quarter by quarter. I think things like trade disputes did not help. You can look at China, where industrial production was already decelerating. Now it's off a very high number. They used to run high single digits. Now they're more mid-single digits, but slowing aside from coronavirus. And coronavirus is going to have some effect on that number as well. India industrial production was lower. So I can't think of a country as I go around the world where the industrial production rates are actually higher going into 2020 than 2019. So what that means is we have to find growth where we can. That's more resilient markets like healthcare, food and beverage. I think decarbonization is going to provide some growth opportunities for us as well. And then we have more self-help from our merger, where we're able to combine our applications and our technologies, our engineering capabilities, and leverage that across a larger global footprint.
Mm-hmm. So in a nutshell, you'd say visibility is somewhat clouded through a couple of issues like coronavirus or the trade disputes. Can you tell us how much momentum you've had since the beginning of the year?
Well, I can't say that I've seen much momentum since the beginning of the year. And, you know, you mentioned the coronavirus, and a lot of people are talking about that. We have about 2,600 people that work in China. Fortunately, none have been affected by coronavirus. We have about 1% of that population that would be in Wuhan, which was the initial flashpoint for the disease. We have seen growth slow considerably. We do things like prioritize the flow of our products to areas in need, like for healthcare, for hospitals, oxygen for hospitals. But it's a tough environment there, and it's a bit unpredictable in terms of how quickly they will return to a normal state of affairs in China. But it's something we're watching every day. But as of today, they've been coming back very slowly from the Lunar New Year.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.